let's go ahead, and I have a few charts here, and I want to actually go ahead and explain why this approach is very important also for, these big events. Everyone gets really excited about, things like Brexit, and they see the charts move, they see things moving, and they get really excited and emotional. And the reality is that you can make a lot of money during periods of time where there are these unexpected, essentially surprise breakouts or surprise markets, we can call them. But the whole point is actually that you're taking positions in a very structured way so that you're in position long before these sort of fundamental events hit the market. You're not waiting for them to happen and then reacting to them. So we're going to go through some charts here. I'm going to explain a lot of these concepts, but again, keep in mind that, think about, not how, you're trading just over the course of a couple days during an event, but what am I doing every single day in the market that's improving my odds, making sure that I'm positioning myself in line with these global, related markets, so that when they start to move, you're often already on board when a lot of this volatility starts to creep into markets. So here I have a chart here for Lululemon, and I'm going to go ahead and go through really everything on the chart here, but I want to actually explain a couple of really important concepts here and what's really generating a lot of the tools and information here on the chart. Now, I've gone ahead and I can type in Lulu into my chart here. You see, this is actually the VantagePoint software. It's performing a very important type of intermarket analysis for us, and then generating actually future-looking, forward-looking predictive indicators. But how this does this is it's actually using a technology called neural networks. This is actually a type of artificial intelligence. Now, what this neural network process is able to do is scan unbelievable amounts of data. I mean, we're literally talking about just unbelievable amounts of data and data points coming in, but what it's doing is it's actually able to identify, through actually the neural network, the artificial intelligence actually analyzing the data, and it's able to identify those important market correlations. So if we go ahead and look at some of these markets here, you see we've got actually an inverse ETF with the S&P 500 here. We have light sweet crude oil, the dollar index, the Japanese yen, euro, some currency cross pairs in there. You've got individual U.S. stocks, as well as the ETF groups, and like I said, those futures markets like the gold market, interest rates. So this is the type of information that most traders are completely ignoring. They have no way of analyzing this information, and what they actually end up doing is just go, oh, well, the hell with it, I'm just going to ignore that information and then rely on essentially, regular technical analysis, outdated indicators that aren't really going to get traders to see a lot of the results that they'd like to see in their P&L at the end of every trading month and year and things like that. So that's a little bit of the secret sauce behind the software, but you have to understand that there's actually 2 patents on this approach as well. So that artificial intelligence is able to identify those important markets, but then also weigh those relationships. So not only the identification, having a patent on that process, but also really the weights and how each one of those markets is, again, leading the market, possibly lagging, sharing a positive correlation or a negative correlation. So you really have to utilize technology nowadays, and we understand with how the world is changing, almost everything in the world utilizes really technology to give itself an edge, to be more efficient in whatever the endeavor is, whatever sort of business you're entering into. So I want to go ahead and let's explain everything on the chart here. So this is very, very important. Now, if we look at this chart here, this is all daily bars and candles. So how these indicators work is waiting for all of those global markets to close down and then generate these values that we see on the chart. Now, the black line that you see on your chart here, this is a simple moving average. Now, most of you beginners even have probably understand what a simple moving average is. It just takes the last 10 closed prices, averages them together, and then plots that line forward. So every day it moves forward, drops off that 11th day close price, and it's what's called a lagging indicator because, well, one, it's only based on past prices, and it's only based on past prices from the one market that you're looking at, in this case, Lululemon. So it's completely known information. All of that is essentially priced into the market, and an indicator like that, essentially that moving average, really gives you no edge or really no advantage in the market. Now, the blue line that you see on the chart there, that is actually VantagePoint's predicted moving average. So to plot that value, it's weighing those 25 to 30 global market relationships. So it's looking at the dollar, it's looking at the S&P, it's looking at competing stock, it's looking how the like the consumer discretionary spider, how that's trading. So it's analyzing all that information and then plotting these predictive indicators for you so that you can then make intelligent trading decisions off of probabilities rather than, you know, what you heard in the news one day or really old lagging technical indicators that aren't really going to give you an edge and understand, hey, what should I expect in the market, and therefore how should I be positioning myself based on that expectation. Now, that blue line is what we call essentially a leading indicator, and what we want to do is look for any opportunity or any times where that blue line has crossed above or below the black line, because what that's telling us is, okay, well, our predicted moving average, so the, you know, really the summary of all that, you know, those 25 global market relationships, is plotting that value, and when we get those changes, essentially, when the blue line crosses above the black line, it's telling us to expect that moving average, essentially that trend, to keep moving higher. So that's a very important thing that, you know, using this approach we really want to pay attention to, because we want to get on these opportunities early. We don't want to be lagging behind them and really affect our timing in the market. But then we also want to be very adaptable and be able to really manage this position as it moves forward, but in a way that, you know, really makes sense. So we want to get in on these things early, really reduces a lot of the risk. But then every day, remember, these values are going to be plotted ahead for you. So you're going to understand, you know, what should I expect over the next couple trading days? Should I be a buyer? Should I be a seller? So, you know, this is what's really going to help us with our overall trend direction. And another thing that we should always keep in mind is that when we get a lot of distance between the blue line and the black line, well, what is that essentially telling us? It's telling us that the prediction, that predicted moving average, is far away from the actual, and that means that there's an even really stronger trend in place there that we want to take note of. Now, so we can see here, I'll go ahead and remove some of these lines here, but as long as that blue line remains above the black line in this case, and we actually see we had, you know, blue line below the black line, we got a nice downtrend, but for this example here, as long as that blue line remains above the black line, we want to go ahead and hold that position. Essentially, it's saying, look, the market is still moving higher. Go ahead and act accordingly. Now, the crossover to crossover, you see we got about a 14% move higher, a really nice rally, but I really want to explain this indicator at the very bottom of your chart here, because it's really important that we use these tools in tandem to really accommodate whatever our trading style is. And this is why it's so important. What I talk about is, you know, regardless of what your trading style is, whether it's options, whether you're a shorter term trader, whether you're a long-term trader and trade these, you know, longer positions and swings in the market, it's very important that your timing in these opportunities is really refined, because what's going to happen is when you have these sort of major events break out and volatility really picks up, you need to already be in your position. You need to essentially get that really good entry really months ago, so that when these unexpected events take place, a lot of times the volatility is just going to push your trade more in the direction that you'd expect it to go. But regardless of, even with all these events, with earnings reports, with Fed announcements, the software is still consistently accurate, about 86%, as far as determining that short-term strength or weakness in the market. And so what I want to do is focus on this neural index at the bottom here, and you'll really, those concepts will really stand out to you here. Now, the neural index, and I'll go ahead and bring up my pen up here again so we can explain this. The neural index, if I drag my cursor here, you'll see this indicator here. It's called the predicted neural index, and now this can only be a value here of a 1 or a 0. And what this indicator is extremely accurate at doing is really forecasting 2 days ahead and determining, look, the overall strength or weakness in this market over the next 2 candles. Very important. Remember, it's just a 48-hour short-term indicator, whether you should expect some short-term strength or weakness in the market. Now, when we pair that with the neural index, that can help us be really very adaptable in the market, understanding when we want to be heavier on positions, when we want to push our winners, and also when we want to be scaling out, getting defensive, or trying to get better prices. And so whenever we see these crossovers in the software, so whenever we have a situation where a crossover has occurred, so our predicted moving average is moving higher than the actual, it's leading that move higher, and we see that confirmation of the neural index at the same time, to essentially know that, hey, there's been a directional shift in the market, and we also have that confirmation over the short term that we should expect prices to move higher over that next 48-hour period. how I look at that as a trader, this helps me get a good entry into the market and then really trail my stops and ride trends out, but you can adjust yourself via this neural index. So for example, you're going to notice that as long as that neural index remains bullish up at a 1, we get a really nice rally here. I mean, these are the days you really want to have the bigger position long so that you can ride these sorts of moves higher. But what you'll notice is that once the neural index drops down to a 0, which we actually have on this day, we essentially have a conflict in the market, but you see here that, blue line's still well above the black line, so it's saying the overall direction still to the upside, but expect some short-term weakness over the next couple of trading days. And you'll see that you get that weakness, but you never get a crossover to the downside. It never says, okay, now the trend is reversed, go ahead and actually set some shorts or go ahead and take your entire position off the market. Now, we get a little bit higher here. You can see neural index up at a 1. Again, that short-term forecasting doing a really great job here. We're seeing higher prices, and this is what I'm getting to is, we have to know what to expect regardless of the markets that we're trading. So, when we're in the market that couple of days, if you're a shorter-term trader, it's saying, look, this market is moving higher. Look to go ahead and hit those profit targets. Go ahead and trade that market higher. But we want to make sure that we have these sort of clear confirmations of when things change and when conditions change. And what we see here is after this trading day here, your neural index down to a 0, we pop back up to a 1, but more recently, cross over the downside. So it's really confirmed that, look, go ahead, take that position off. You can go ahead and obviously you have more positions in the market, other things that are still trending in your favor, but when you get these clear indications that say, look, the neural index has moved lower, you've gotten a cross over the downside, your best bet is to just go ahead and step aside from the market, take your profits, and move on to something else. Now, that's just one example here in Lululemon, and I want to go ahead and expand on this concept of, that's how this technology works. That's how these artificial neural networks analyze this information, plot these lines for you so that you can, again, adapt with the market based off your trading style. But when you have a tool like this that's, applying this, very consistent, accurate forecasting to an extremely wide set of markets. I mean, this is through ETFs, commodities, currencies. What we can do and what's extremely helpful is to, use these tools to help us get confirmation from, even other markets, again, using the same approach. So here I have a chart for Acadia here, and I also have the iShares, the NASDAQ Biotechnology Etf. And again, I really get back to this concept of, we want to take positions in the market, but we don't want to take them the day before big events like the Brexit or earnings or FOMC announcements. Those things happen. We want to be positioned in these markets, adjusting our positions accordingly, but we have to do this every single day. So every single day we go in, look at what the new recent forecast has been, and then make our trading decisions accordingly. Well, something we saw quite a few weeks ago is the Biotechnology Etf, and this is something that I've been really demonstrating for quite a long time, because you see here that if we look closely here, we'd actually gotten a crossover to the upside, neural index up at a 1 over this time period, and a lot of these pharmaceutical companies were doing great. We had clear forecasts with, again, crossover to the upside, neural index up at a 1, that was really telling us, look, go ahead and look to get long the market, Acadia Pharmaceuticals, as long as that blue line remains above the black line. See, it's about a 30% move higher in Acadia. But let's take a closer look at this, because I want to focus on two things here. I want to focus on not only getting the confirmation, so this clear confirmation from our crossovers and our neural index, but how we can use the ETF markets to really help us identify where should we be looking for trading opportunities. And so when you look at the BioShares ETF, we had a crossover there. The neural index very, very weak. This is what was really sending your direction over this time period all the way at the beginning of June. I mean, this is June 9th the crossover came through, so 20 days ago or so, where these crossovers came through and said, look for opportunities to the downside in essentially biotechnology, a lot of these pharmaceutical companies and things like this. And so, when we have this software, and actually I'm going to show you after a couple of these charts here, we have a scanning feature in the software. So, you're not going to have to look through chart after chart after chart. You're going to have these crossovers essentially presented to you saying, look, here's a new fresh opportunity. There may be a trend change here. Pay attention to these markets, and then you can really fine-tune and focus on, hey, I actually want to go ahead and take that long or short position. So Here in the biotech ETF, we saw this really across tons and tons of pharmaceutical companies back there earlier in June. But let me go ahead and expand this, and we can take a close look at specifically Acadia here. And this is really, I mean, you have to take a close look at this and understand, again, how am I making trading decisions every single day? Am I pushing my long positions where I'm currently long? Am I getting defensive because there's some short-term weakness? Am I going long or am I going short? Again, timing, direction, what we want to know. Now, if we look at this crossover, you see we got a clean crossover to the upside, right? Neural index up at a 1. But look what's going on here. So neural index stays strongly at a 1, getting a nice rally in the market there. Neural index drops down to a 0 on this day, and what do we see? Well, a little bit of short-term weakness over these trading days. Neural index down again. Again, a little bit of weakness as that low price dips below $35 again, but the overall direction, not even close to a crossover here, guys. You see the blue line still above the black line saying expect some short-term weakness, but direction is up. Neural index goes back up to a 1 on this day. So what do we expect? Over the next 48 hours, strength in the market and a huge rally up to 72, but look how early, or 42 rather, look how early things change, guys. Look at the neural index after this trading day here. Goes down to a 0 at the very top of the market, only comes back up for 1 day here. So it only comes back saying maybe some short-term strength over the next couple trading days there, but you see as that comes through, very clearly saying, look, over the next couple of trading days, expect weakness, expect weakness, expect weakness, and here's your crossover clearly pointing out that, look, the direction is down. You do not want to be taking long positions on Acadia Pharmaceutical. You don't want to be adding to your position. If anything, you want to go ahead and short the market, and all throughout the pharmaceuticals, and especially here in Acadia, which has, you know, really been a beautiful opportunity to the downside and to the upside over a really long period of time here, but a 21% move over the past 8 trading days. So this is what I get at is we want to take advantage of this sort of volatility that we get with essentially these events, these types of high volatility events where all this vol comes into the market. We want to be prepared for it, but we have to really focus on what is our process we use every single day in the market, because it isn't just about the event. It's about your process, what you do every single day to determine, am I a buyer or seller in this market, and am I getting long now, or am I looking to go ahead and short the next opportunity? So this is why this is so critically important. We can see another few opportunities, and then what I really want to do is dig into the scanning feature a little bit. And what's going to happen is, you know, each evening you're going to be able to scan through literally hundreds of markets and see these directional changes and really understand, okay, here's an opportunity, and then utilize these tools to understand how should I trade this moving forward. But again, you know, it's fundamentally different than what so many other traders are doing, who are really relying on forecasting tools that have no way of accommodating for things like the dollar index, crude oil prices, ETF markets, related stocks. So it's just critically important that you utilize really an approach every single day that's going to help you make better decisions. Here I have a chart for Symantec, and a good example of an opportunity right now where, again, you can go ahead, get in the market in a really structured way, and, you know, have a process for how you look for opportunities, but then understanding how you can trail stops, write out longer term trends, but stay in line with essentially that forecast. So you see here in Symantec, we got in a crossover to the upside here, neural index strongly up at a 1, and you see that we get these really nice rallies over this time period. But, you know, neural index has been positive for many, many days, essentially the entire month of June, but look more recently where neural index dropped down to a 0. Last night we had neural index drop down to a 0 as well. So the overall direction is still up, but definitely wanting to go ahead and take profits on a position like this and possibly even go ahead and trail your stops up and start getting somewhat defensive in the market, but you still don't have that clear confirmation of trend change. And that's what you want to wait for, is waiting for, you know, again, those clear forecasts where everything's in agreement, and make sure that your process is really built off of that, not so much, you know, looking at what happens over a couple of days and then trying to decide if you're going to chase it down or not. Another opportunity here in Cyprus, and this is really what we're talking about, having clear tools that indicate, you know, based on your trading style, hey, should I be looking to take long positions? Should I be scaling out of the market, or even looking to go short? Here in Cyprus, crossover to the upside, Neural index up to a 1. So we see crossover to crossover, pretty nice move higher, about 12.5% move up in Cypress Semiconductor. Real cheap stock there. You could have bought that in about $9 a share. But I want to focus on the crossover here. So we see that, once the directional shift was confirmed, getting a lot of weakness there in the market, about 12% to the downside. But look at how accurate your neural index is over the course of this move. So a lot of strength through the neural index over this time period. Market just keeps moving higher. But look at this right here. I mean, you literally have 3 trading days in a row here, neural index down, telling you, look, scale out of your position, take some profits, maybe go ahead and tighten up your stops. If things continue, great. But once you get this clear confirmation that says now everything's going down, take your profit and actually look for opportunities to go ahead and short the market. So again, getting back to that idea of, we want to go ahead and get positions in the market, but we really need to make sure that we're entering these positions in really an appropriate way so that when that volatility all comes in, we're positioned to deal with it, and we don't have to be reacting to what the market is doing. You already know what your game plan is, what your expectations are, so put your orders in the market, and then you really let these trades play out based on, again, what the short-term forecast is showing you. So last opportunity, and then what I'm going to do is actually scan through some of the service sector, because that actually has the most individual stocks in there. But this has gotten a lot of attention recently here as well. Wynn Resorts. So let's look at this closely again, and I want to focus on the neural index, because once you get this, it'll really help you understand, how you can manage a position much more effectively in the market. But you see here, blue line over black line. Nice. So we want to go ahead taking long positions on Wynn. You had that confirmation from the neural index. But look what happens here. Neural index drops down to a 0 after this day here, saying, look, expect some short-term weakness. We certainly get that. I mean, the market moves from about 97 a share, drops all the way back to around 93, but look at your blue line over black line, clearly indicating that, look, direction is still up. Expect that short-term weakness over the next 48 hours, and once everything really realigns itself with your neural index, again, coming up to a 1 after this trading day here we're getting these nice rallies, meaning I want to be a buyer over these next couple of days here where direction is up, 48-hour forecast is up, and we get that nice push higher. Again, you see how this neural index adapts and changes. Neural index down to a 0, getting that short-term weakness. Look where we're trading a couple of days later. Again, neural index not looking especially strong over this time period, and here we get that clear confirmation. Cross over the downside, neural index down, and definitely do not want to be long Wynn Resorts over the past few days going into that Brexit news, but a really clear indication that says, look, take your profits to the upside, be a buyer over this period of time here, but certainly no way on earth you're buying the market over that period of time there. So now let's go ahead and I'm going to go ahead and open up the service sector stock, because as I mentioned, I literally every evening scan through hundreds and hundreds of markets. I trade commodities, trade currencies, trade literally hundreds of stocks and ETFs, and I do it based off of this approach because I really don't care what the market is. What I care about is my process, how I'm approaching it, what are my odds of seeing the move that I'd expect to see. So instead of scanning through each market and clicking and looking for a crossover and looking every single day to see if there's a new crossover on any of your charts, there's actually a scanning feature called IntelliScan. That what it'll do is it'll actually scan through all these markets and present you with, that fresh crossover. You can set and make sure that the neural index is confirming the direction that you're looking at as well, and it saves a ton of time. So literally in the evenings, I probably spend about 10 minutes looking at the Forex market and the commodities markets, because there's literally maybe 80, 90 total markets there. And then I just get up early in the morning before the market's open, spend 20 or 30 markets scanning hundreds of stocks, and really find where I want to be positioned that day in the market if I want to be taking any positions at all here. So what we can do here is, here's my services sector, and this has the most opportunities in it. So it's a good example to really run these scans. But I can go ahead and I can set this crossover criteria. We can move that to a 1, because like I showed with those examples, setting it to a 1, we want to see those fresh opportunities that are just coming through. We can also set the medium-term crossover to up, neural index to a 1. So this would essentially show opportunities to the upside in markets. So we see here Whole Foods, possible opportunity there, crossover to the upside, neural index up at a 1. This is actually something that a few weeks ago when we ran our scan, this is what came through, saying, look, not a time to be long Whole Foods, and that was a great opportunity. Again, going into that volatility, time to be short, probably about a 10% move, about 33 down to 30 really, really quickly here. But you'll see how quickly this is scanned through about 169 markets. It's found 3 possible opportunities. I mean, most of the market is actually trending lower here. So, but whether you want to set this to, moves to the upside, so crossovers to the upside to look for opportunities, you can also just reverse all this and set things to the downside for when you want to go ahead and look for opportunities to short or when to buy some protection with puts and things like that. But this is what's going to save you an absolute ton of time with doing your really analysis every evening. So instead of using so many traders using 5, 6 different indicators, really confusing the issue, whereas using this approach, you're going to be able to just focus on, hey, where is the new fresh opportunity, and then how should I be again buying and selling over those couple day periods to make sure that I'm able to capture profit and really have those probabilities on your side.